Welcome back to the channel, everybody. I hope you guys are having another awesome day. It's Rick coming back at you. And in today's video, I want to talk about what to do when you are facing uncertain times, but you still want to invest. But before we get into this, make sure that you are subscribed and that you turn on that bell notification, because I am always dropping a YouTube short a day, but also dropping a video at least once a week. And this is to help kind of set you on the path of success for reaching your financial goals. So if that is something that you're interested in, you want to make sure that you are subscribed and that you have that bell notification on so you're notified every single time I drop a new video. And in today's market, we're hearing a lot of things that are creating uncertainty. We're hearing a lot about inflation and how the inflation rate is the highest it's been in a really long time. But also on top of that, we're starting to see interest rates for mortgage go up as well. And what this is creating in the economy is a stagflation, if you will. And what that's doing is people are really unsure if we're going to see this bubble collapse or if the market's going to continue moving forward. And it's kind of a holding pattern because we're waiting to see what the Federal Reserve is going to do and how they're going to try to combat these issues that we're facing. But in the meantime, what we're seeing is a lot of scared investing. So obviously during these times, it's really difficult to know where to put your money for investing. So what I want to show you is a couple of different ideas that may help you for understanding what's happening right now, and then also how to continue investing through this period of uncertainty. So let's go ahead and talk a little bit more about it. There really are two ways to prepare for what's happening and also work with it. And the first one I want to start with is dollar cost averaging. And essentially what we notice with most investors is that they'll take a lump sum of cash when they get paid and they'll put it into their favorite investment, whether it be stocks or crypto or what have you. Well, right now with the uncertainty in the market, you're at risk of losing a chunk of that money right up front. So as an example, you may drop $100 into a stock and overnight it'll drop 20, 30, or 40%. Now it's difficult to come back from that because you have to gain back that percentage in order to get back to your starting point of the $100. So during uncertain times, dollar cost averaging is the traditional route that a lot of investors will take. And dollar cost averaging, essentially what it is it's taking that same amount of money that you would initially drop as a lump sum and dividing it up into a per day investment. So we'll just use $100 as a nice round number. So let's say that you're used to investing $100 into your favorite investment. Now, what you're going to do to dollar cost average is you're going to take that $100 and you're going to divide it by the number of days until you get paid again. So if that's you get paid every 2 weeks, you're going to take that $100 and divide it by 14 days, which would leave you with $7.14. So rather than dropping in $100 into that investment, you're going to invest $7.14 every day for 2 weeks, which would still give you the total investment of $100. Now, why is this better than dropping in the $100 initially? And the answer to that is, if you drop $100 in initially and the market drops 20, 30, or 40%, you now have to come back and gain that 20, 30, or 40% to get back to the $100. However, if you're doing $7.14 as a daily investment, let's say that the first day you're only down 10% and then the following day you're up 5%. You only have to come back to a 5% gain in order to get back to your starting point. So really what you're doing is you're hedging against total amount of dollars lost. You're not losing as much dollar cost averaging if you did that compared to just dropping the lump sum in. So that's one way to prepare and work with the current economic conditions so that you're ultimately hedging against your losses, but you're still participating in your active everyday investing. The next method, and this is one that I only recommend if you're actively dollar cost averaging. So you want to use this one on top of dollar cost averaging. And this one is to have a side pool of money that you're putting off to the side and waiting to buy the lows. Now, here's the common mistake that a lot of investors will make is they will wait to buy the lowest low and they'll try to time the market. But a lot of times they'll miss out on the perfect opportunity to buy and they'll never pull the trigger. And in doing that, you're ultimately losing out on massive gains in the long run. And every single day that you're not actively invested in the stock market or in whatever market you're in, you're losing money. So keep in mind that this is why I say it's important that if you're going to do this method, you also want to have the dollar cost average method in as well. That way you're still investing every single day. But having a side pool of money allows you the ability to buy these dips as they continue to go down, because what goes down will also come back up. So you'll get a chance to see those gains, but you're buying things at a big discount. And also, if you are somebody who is interested in real estate, for instance, obviously after 2008, the real estate market, basically you could get houses for pennies on the dollar. So it's nice to have that nest egg as well. So if you are wanting to do something like that, you now have the ability to, because you've also put some money aside and you're waiting for this market correction to come so that you can jump on these opportunities. So again, this is a method that you want to piggyback on top of the dollar cost average. I wanted to share those methods with you because investors tend to freeze up when market conditions are the way they are and they're really not sure what to do, although a big portion of them wants to continue investing. So this strategy is something that you can employ to continue building on your portfolio and not have to risk losing a massive chunk of money right off the bat because something crazy happened a couple weeks down the road. So I hope that this information did help you. And as I mentioned at the beginning of the video, I am always putting content out there that is money related, whether it be basics to investing or understanding what some investment strategies are, or just going through what the news for, changes are in the financial industry as well. So if that's something that interests you, you want to make sure that you are subscribed and that you have that bell notification on. Other than that, I hope you have a fantastic rest of your day and take care.